Hello, everyone. Welcome into the Prospero.ai live stream today. We are seeing a major reaction to the Fed meeting and the result that just was announced. So the Fed is holding rates steady. They're slowing their tapering a little bit. So they're going to be doing 5 billion a month instead of 25 billion. They lowered their growth forecast slightly from 2.1 to 1.7%, but must have been no major surprises for the market there because we are seeing green across the board. Finally, everyone, right? So the QQQ is up one, and it's up even more now, 1.7% on the day. We're seeing the rally grow even more. The S&P is up 1.33%. The Dow Jones just crossed 1% up on the day, and the Russell is approaching up 2%. The VIX is down almost 8% now. So we are seeing a relief rally across the board. It is noteworthy that the net option sentiment in Prospero for the QQQ and the SPY has not reacted as of yet to this bullishness. Let's get a live look and see if anything has changed in the last couple minutes. The QQQ net option sentiment is at 25, and the SPY is still at 0. So the net option sentiment is not buying this rally just yet. But when George gets in here, I'll ask him if you guys should be. So are we going to use this rally to sell some stocks that we've been stuck in as the market was dipping, or buy some laggards? Which way is he planning to position himself? And now with this FOMC meeting behind us, where is the next volatility trigger? So I see a lot of mentions of the April 2nd tariffs. Is that the next major milestone for the market to get past? And are we going to have this little relief rally until then, until that next troubling development possibly? Then we have a lot of stories to go over, mostly on the mega cap tech stocks today. So we have Mark Zuckerberg announcing that Meta's AI model Llama has hit over 1 billion downloads. And there's some more information that I'll share when we go over that story live. But taking a look at Meta stock, which has dipped quite a bit, we were covering how it was having that historic run where it went up for, I think it had over 20 straight green days. Now it's pulled back a bit. So is that George's favorite tech stock to add at this point? Then we have two stories about Google, but the first one is a combo with them and Apple. They were hit with EU antitrust actions today. So how is that going to affect these companies? These are nothing new to Google and Apple. They've been hit with these a lot from the EU. So are we going to see any retaliations from the Trump administration? They've already mentioned how they think American companies are regulated too strictly in Europe. So what will be the outcome of that? Then Google also announcing yesterday that they will be acquiring Wiz, which is a cybersecurity company, for $32 billion. So it's a big acquisition. This company will bolster their own cybersecurity and as well as their cloud package. So what does this mean for Google? Is it a good move? I was shocked that I think Wiz is only like a 5-year-old company and doing about $1 billion in revenue. So they're paying a hefty fee for this. I'll ask George if they're overpaying or not. Then we have a possible Musk margin call to go over. So there is a scenario where if Tesla stock falls, I think under $100, which probably extremely unlikely for it to get down that low. But if that were to happen, there would be trouble for a lot of the whole universe of Musk companies. Let's see where Tesla's at today with this rally. Tesla's up 6% on the day and just crossed $238. So they'd have to fall quite a bit still. But we'll go over that story because our Musk topics always make great content. And if you don't watch our short form content, you can follow us on any of the social media accounts that you use, Instagram, YouTube Shorts, TikTok. We post short clips from these live streams on all of the platforms. So if you like that kind of content, you can always watch us on those. And we have a story about Amazon terminating 14,000 managerial positions, which is a callback from when we were covering the silent firing, which George actually wrote an article on. And Amazon at the end of last year said if you don't come back to the office, like we'll take it as a resignation. So they were trying to get people to come back in. Um, they even responded and said that they were doing that. The cause was not to have people quit, but now they're firing those same people. So it seems like the truth has been revealed. But we'll tie up that story. It looks like a final note on it. And then last but not least, to go over today, before we get to the model portfolio update at the end of the stream, we'll cover Nike stock. They have earnings tomorrow, actually. So is there anything that we can read into the Nike earnings that we could take away and learn about the current state of the economy? I'm thinking maybe the strength of the consumer is something we could possibly read from the Nike earnings. Maybe they'll mention anything to do with China and the tariffs. So um, look out for those earnings tomorrow. And then Nike stock specifically, it's been a stock that has just been beaten down even before this most recent market sell-off. Let's see how Nike's performed year to date. Year to date, they're only down 4%. So compared to the overall market, probably not that bad. But over the past year, down almost 26%. And over the past 5 years, just up 11%. So that stock has not been it for quite some time. So maybe it's setting up for a low bar where they can exceed the expectations of the market. And this is the rally that just keeps on going. Looks like there was a lot of pent up demand from investors to buy the dip, and today was the trigger. Very interesting because it didn't seem like the Fed really gave too much new information, kind of held steady. But Jerome Powell is actually speaking right now, so maybe he's saying something also and calming investors' biggest concerns. Let's check the Prospero app and see if anything has changed with our short-term bull list. There's been a lot of China companies on there recently. I think Google's been on there a lot. I saw Boeing was on there today, but let's see if there's anything noteworthy to go over now. Okay, Metastock has popped back on the list. Micron, which I've seen a couple times on there, is on the list. Amazon, Google, Snowflake, Nvidia. So a lot of major tech stocks finding themselves in a bullish setup currently. Coca-Cola is on the list, which is a little bit surprising. Actually, both Googles, the GOOGL and the GOOG, are both on the short-term bull list, so that's interesting. GameStop holding steady, also on the list. And then last but not least, Alibaba, which is the only stock currently that has 100 net option sentiment and 100 upside. So let's see how the China stocks, specifically Alibaba, are performing today with the market going higher. Interesting. So the China stocks are kind of underperforming today. BABA is up only 0.5% on the day. Pinduoduo is actually red, 0.7%. Baidu is down almost 4% on the day. JD.com is slightly red. So China stocks underperforming. Maybe we're seeing a rotation back into USA tech and the USA markets overall. Let's see, what is Bitcoin up to today? Bitcoin is up 3.5% on the day, approaching $86,000 total. So Bitcoin is liking the Jerome Powell press conference and Fed decision today with the overall markets. Let's see, we have had 80 people in the stream so far. I'm hoping we had a good turnout on YouTube. If you guys are watching on Twitter or YouTube, please make sure to like the stream if you enjoy the topics we always cover. As always, feel free to comment any questions, concerns, stocks, macro, anything you want to hear us discuss on the stream today. We're just waiting for George to get on in here now, and then we'll get into our topics. So just me and you guys for the moment. But he will be in here any minute now. Okay. Let's see. Where are the overall markets? I'm pretty sure there is an impending touch of the 200-day moving average from the QQQ and the SPY, which both had broken below. Yes, so the SPY is approaching it pretty close now. 200-day is sitting at about 573, and it's at almost 571 right now, so just 2 points away there. That's probably the first resistance level that we will hit on this rally. The QQQ is a little bit underneath where the SPY is, so there's a little bit more room to run if we are getting a nice couple-day rally here, or a couple-week. 493 is where the 200-day is at, and we're at 484, so 9 points to go there. Hello, George. Welcome to the stream today. I should have worn a green shirt today instead of red because we are seeing a nice rally after the FOMC meeting and Jerome Powell's conference. He must have, obviously we couldn't listen to it because we're here, but he must have even calmed the market's fears even more because it's been rallying ever since. Green across the board. Nothing really surprising, I don't think, out of the Fed meeting. They left rates unchanged. They slowed their taper a bit, so they're going to be doing $5 billion per month versus $25 billion. And I think the only other newsworthy thing I saw was that they're expecting slower growth, so about 1.7% versus 2.1% in Q1. But market likes what it heard. So why do you think the market is reacting so positively to this meeting today?
Well, I think there's a fair number of reasons, and I'm just doing one more thing. I need to start leaving more time to debug the camera. That's become a very rebellious camera. But yeah, I think I see a lot of reasons for it. I think that the primary one is that I think people are just looking for a positive catalyst. And why I started to go into some long names this morning was that, the market getting what they expected is always good. And there was a 99% chance of Powell keeping rates the same. So I kind of looked at that. I'm actually looking at the bond market more. Maybe one of our watchers that's here today is teaching me more about it because I was always much more of an equity guy. But one of the things that gave me confidence is I saw there was a positive risk appetite in the bond markets combined with the fact that I expect things to go well today. It seemed like people wanted a reason to be to take on some risk, to be excited. And the market's all about perception. And I think that's the thing. I don't think Powell said anything that was that shocking for him or that, positive. I even actually saw something on X just appear that said, he specifically said tariffs lower growth and raise inflation. So, those are kind of the dual against the dual mandates, you'd say, of the Fed. So that's even, not great news, but I think maybe people were looking for, were worried about even more of a confrontational attitude between Powell and Trump. I think maybe that was what would have made it go red, because, Trump's taken a few small shots at Powell, not really directly. Maybe there was one directly, but a lot of it is just about how he wants interest rates to be lower. And I think Powell has some different thoughts on that, clearly. But yeah, I think what it boils down to is the market. The market, I think, wants to have a little bit of a recovery. I think people are seeing more value at these levels. As we're going to talk about later, I think, we have a little bit of time before we kind of get the next big tariff news. So I think there seems to be some upward pressure on the market. And I think, these days, especially in these uncertain times, I think not getting bad news, not having anything, really come in as a surprise or below expectations, is clearly going to rally the market. So yeah, I think that, obviously if there's other events that are negative events, it's going to, hurt this rally. But, I'm still thinking about if I want to stay in, some of these longs or just take my wins today. But I was looking, QQQ net option sentiment was only at 17. Oh, there we go. Popped up to 42. Do we think SPY has moved? No, still at 0. But yeah, 42. So yeah, there we go. A reason to be a little optimistic.
So, like you were saying, the next, I'm hearing everybody reference it already, the April 2nd tariffs, but that is, like 2 weeks away. Now that we have the Fed meeting behind us, do you think we have a nice 2 week window here where the markets can rally? And would you use this opportunity to, buy beaten down stocks, or would you try to get out of stocks if they rally and sell the rip if it occurs?
I mean, the hard part right now in this market is that we just really don't know if there's going to be, other news. Like, we're going to go through some concerning like Europe data. And I think that's the really hard part where it's just like, you could say nothing's going to happen until April 2nd. But you also just don't know with all the uncertainty when people are going to say, we're pulling the plug, right? I actually like to see QQQ net option sentiment at 42. That's making me feel better that there's some real risk appetite, like we saw in the bond markets earlier today around this event. That's going to make me like probably closer to leaning to at least stay in a few of these longs that I just got in today. But yeah, we'll see. I might have the quick hook because, with SPY net option sentiment 0, we have not seen a very resilient market.
Mm-hmm. So one of the tech stocks that has been beaten down is Meta. And we were covering how they had that like historic, I think 20 plus day green streak. It feels like a long time ago now, but it wasn't that long ago. So Zuckerberg came out with a thread about how Meta's AI model Llama has now been downloaded over 1 billion times, which is up 54% from just early December. And they also gave some companies that are using Llama, which was Spotify, AT&T, and DoorDash. Is Meta one of the prime stocks you'll be looking to pick up if you do wind up feeling a little bit more bullish about the market?
No, I already picked up the ones I was going to pick up. I don't know where Meta's option sentiment is today, but yesterday it was at 53, which is very, very low for it. I don't know what, like, I can't see anything that's materially changed around Meta other than people just might not think that the value is there anymore. I think that, I don't know the numbers on, Blue Sky, but I think we're going to talk about this a little later with Elon Musk. I think some of it is about the user base, right? And I think there might be some concern that, Meta was previously a pretty liberal user base. And obviously that's kind of what got them into trouble with Trump. But, they're already looked at like that. So I think a lot of people on the right don't necessarily see it as their place. And I think, more and more I've heard about people, boycotting that. And you haven't seen it to the same extent as Tesla. But yeah, I think that could be some of it, or maybe just some of it is people don't see as much. Meta's gone on such a big run. It's possible people just aren't seeing as much value in it. But that's the thing about us and the signals, right? Where it's just like sometimes we find confluence in the signals, and that was the thing that got me into Meta a long time ago, where I was like, I actually see this upside, and the signals really like it, but not much has changed of my assessment with Meta other than the signals not liking it. And sometimes that's my indication of maybe I don't know what some other people know. And that's why the signals are useful, because, if I hadn't seen the signals gone down, I got out of Meta at like the perfect time. And if I hadn't seen them go down, I wouldn't have done it. Nothing about my thesis changed. And that's exactly why I built the signals that way.
So you mentioned a bit, but I want to double click on this thought. So is Meta a victim of its own success? They were just like a staple as one of the most bullish looking companies in our signals. They basically went from under $100 a share to over $700 per share with like very minimal dips along the way. I'm kind of thinking about it like, in the NBA, if somebody wins an MVP award and say LeBron James is the best player year after year after year, he's not going to win the MVP every year because they just have expectations. So is that the same thing with stocks, where now that Meta's gone on its rally, investors are kind of, either just less enthused, bored, and it's a victim of its own success?
Well, I don't think I do think, look at NVIDIA, right? NVIDIA like probably had like a 5-year run where it just kept finding new highs. So yeah, I mean, I don't really know if that has to be the case, but to kind of talk about the difference, I think NVIDIA, and we talk about this with Jensen Huang all the time. It always had, the next chip or some, or all of a sudden, they were in the server game, right? Like there was so many positive news events and all these big unveilings and these new applications, and they kept it going. And I think that's what Zuckerberg's trying to do with this llama thing. He's trying to do something similar, but it's not really the same for open source, right? As it is for paid applications. I think some people are saying that, and I just don't, not that open source is nothing. We talk a lot about, that's one of the reasons we like them long term. But I think to sustain a rally like they have, you have to keep producing new positive news. And I think, some of this political stuff is viewed as a risk factor, right? I think that, some of these people leaving, it could extend, and they're not going to replace them with kind of like the left people leave, are not really going to be replaced with the right. And then so I think it's that. And I think it's also like a lack of positive new catalysts. Like Llama's been around, people have been using Llama. So that's not really it. But yeah, I think that you really need to be able, interesting. Rumors are that Trump, he can. I just got into MSTR, so I hope that happens. But no, it's back around to where I got it at. I got pretty aggressive with this stuff. But yeah, I think to put a bow on that, like they're going to need to have some positive catalysts, like this rumor. I mean, one of the things that might not be great about this is I got into MSTR. It was really going up. I was actually surprised how little the crypto summit helped crypto. So, this is something that, but before that summit, I would say, oh, great, Trump's about to talk, crypto is going to go to the moon. But if it's kind of more, talk than action, which is kind of what, like, I think that like Bitcoin reserve thing was really underwhelming, the actual executive order versus even what he was teasing before that. So we'll see. I mean, obviously, if it's something with some meat, that'd be great. And I'll be glad that I'm in MSTR, and I'm kind of considering getting a little more. But there's one thing I learned about being heavy in MSTR. It really interferes with my sleep cycle. So maybe I'll just keep the one position.
Is there any reason MSTR over Coinbase is just signal based? Looks better?
Better in the signals. Yeah, like not only Coinbase has been getting really low. When I checked earlier today, MSTR was at 97 and Coinbase was at 85. But Coinbase has just shown a lot more weakness recently. And I don't know particularly why. I can't think of anything in the business specifically, but maybe some of the people that are know crypto more might be able to tell me why maybe the perception that Coinbase is maybe might lose some market share to the broker or anything like that. But yeah, I just a pure signal thing. MSTR is like one of the strongest stocks consistently for the last, months.
Well, it's funny you mentioned one of the strongest stocks. I wasn't going to bring it up today, but Alibaba is like at 100 and 100 in net option sentiment and upside breakout. Do you think if USA tech stocks go on a little rally here, that will draw from Baba's ability to rally, or can they both work at the same time, you think?
No, definitely. I think some of the issues of perception around American tech stocks are that China's doing better. So it stands to reason if American tech stocks are doing better, there's there's some stuff that's eating away on that. And that's actually why when I got into app today, I also got into Alibaba, because I figured that one of them at least was gonna run. And I was right.
And we are seeing Google and Apple up today, but they were hit by an EU antitrust action today. And this comes after Trump made comments just a few weeks ago warning the EU against excessive regulation. He feels that the American companies are treated unfairly. I think these antitrust actions are nothing new to Google and Apple. They get them all the time, it seems like. So how concerned are you? Do you think these companies could get caught up kind of in the political drama? Or do you think they'll be able to manage whatever happens?
Yeah, I mean, it doesn't seem like he's reading the room that well by saying that. Because like at this point, like I would agree that like, you know, you see with Colombia, we heard that they're about to cave to his asks. But it really feels to me at this point like Europe is trying like to fight and maybe would like to get under his skin. So it might really be the case that if you're saying don't do this, that might be an easier way to let them know that it's bothering you, and you might actually end up having that happen. Because yeah, I mean, I think, you know, you see what's happening with, you know, Tesla in Europe. I think there's, I think, you know, when you look at, you know, the U.S. voting with Russia at the UN, that's been like raising some eyebrows in Europe. And I've heard, you know, there's been a long-standing intelligence sharing policy between, you know, I would say a lot of the EU nations in America, and obviously like Russia as their mortal enemy. So yeah, I mean, we are kind of getting in a situation where I think we're going to be viewed by those countries way more antagonistically than we have probably since World War II. So that's a real thing. And you know, my hope is that there can be some de-escalation, but right now it just appears to be escalating.
So it sounds like you think maybe we are going to take a break from the globalization of these businesses, and that would hurt these companies that have these massive businesses that are, you know, I don't know, tens of percentages of it comes from overseas. So would you be concerned about companies that are like that?
Yeah, I mean, I think you would say what's happening to the American markets, I would say, is like the way they're being hit is beyond just what you would expect for, you know, tariffs that haven't really fully taken effect yet. Like we keep saying, they haven't even hit, you know, CPI readings, which are looking very normal at all. So I think what we're really talking about then is the perception, and I think the perception issue is that, you know, American companies are going to be hurt. Dollars are going to be pulled out from other countries that traditionally invest in the U.S. market. And some of that I think is already happening. Like you can look no further than, you know, I looked yesterday that I think the Chinese markets since the beginning of the year have been up 26%, the US down 6%. And I think Europe is the number that I don't remember as well, but I think they're up 6%. So that's the data right there, you know, leaving the US, going into these other markets. And, you know, that's just the dollars, right? But some of the reason the dollars are leaving is because I think a bearishness around things like that if there's strained relationships, that it's going to hurt, you know, America more. Like America really depends on globalization and our products being disseminated. We do import a lot, but if you think about like all of the different things, especially the tech, that I don't know if that's officially classified as an export, right? Like the iTunes store. So that might not go on the trade imbalance, but it certainly is going to affect things here. So yeah, I mean, the markets are all about perception, and that is the biggest problem in our markets right now. There's been no earnings reported around this. To my knowledge, there haven't been, a lot of estimate updates around this. I mean, possibly, but I haven't read that many headlines. And even if they are, it doesn't account for the market going down this much. We just talked about we're not really seeing the impact on prices. So all of this is happening due to perception right now. And obviously some of that perception is around real numbers that people are modeling. But, right now, none of it's real, or very little of it's real. And there's a lot of marks of the perception changing.
So yesterday, Google came out and announced that they will be acquiring a company called Wiz for $32 billion. So it's a pretty big acquisition. Wiz is a cybersecurity company, and Google believes that it will up their cloud package and be able to allow them to provide better cybersecurity within it. I was shocked to see that this company, Wiz, is only like 5 years old, expected to do about $1 billion in revenue this year. So over 30 times sales they paid for this. And this comes after last year they offered $23 billion, but it got denied. And it's funny, Google is going under this monopolistic treatment, but then they're also able to acquire a $30 billion company. I don't know. Do you think this will be allowed to go through, and would it help them if they got Wiz?
Yeah, I think it's different enough from their normal business, but it didn't. The stock didn't pop on the announcement, and we talk about this all the time relative to acquisitions, where it's just you got to still pay a good price, and 30x of sales is kind of crazy. And I would go further to say that Google is supposed to have amazing R&D, some of the best algorithms. A lot of what makes cybersecurity good is AI. Automation, so not only is that a huge price to pay, and when you're looking at acquisitions, you kind of have to look at what they could spend, right? And if you look at this, you could basically have Google could spend $10 billion on building a comparable product, and then spend another $10 billion on sales and giving the product away for free for a year or two to the early users, right? And they'd still have $12 billion left, right? And I think I'm not saying that's what they should do, but I'm saying that's so much money. People start to question your effectiveness as a business when you start overpaying for a company that much. It makes you look ineffective, and it makes you look like you can't build products of your own. And you're kind of it's well, Google, if you thought cybersecurity was going to be such a valuable market, why didn't you start building shit a while ago? You had money for Google Glass, any number of stupid fucking IM programs. It's a pretty big indictment of yourself as a business that you have to overpay this much.
So we have to cover this story today, the Musk margin call. So for anybody unaware of this, let's break it down. So when Elon Musk bought Twitter for $44 billion, he used Tesla stock as collateral from loans from big banks. And although it's far away, probably unlikely to happen, but if Tesla were to get down to under $100 per share, the banks would be allowed to take Twitter as repayment for the loans. And I think in the story, they mentioned how investors are starting to get a little nervous. Obviously, it's still over 50% of a drop further from here. But what do you think of this story? And do you think Musk is losing any sleep over this scenario?
Well, I think it would be pretty funny. First X Twitter was pretty left, and it swung pretty right under Musk. It would be pretty funny if it got repossessed, and then all you saw on X was all of this pro banking information. You couldn't come across a tweet without someone saying yeah, I think everybody's too hard on the big banks. No, I think that I do think it's a bit away, but I think there's a reason that people are discussing it. And I think it's just that so much of Musk's, or I would say Musk's company's value in Tesla was actually about the cult of personality around him, believing in him. And, that I'm someone who, was back in the day now, I would say prior to the pandemic, a fan of Musk, and thought he was brilliant and trying to change the world, and a lot of really great stuff. But if you kind of look, and I was like looking at the numbers this way, when I was just like, I read that 60% of America doesn't approve of the work that Musk is doing, which is, I believe, is 6% more than Trump. So people are specifically blaming him, like, or not liking his work beyond, what he, supposedly, like, Trump seems pretty aligned with him. So they're really signaling him out. And I think part of that is his specific behavior, right? So if you actually look at that, look at it just in America, like, we'll talk about other countries in a second. You look at it just in America, like, you're probably not selling to 60% of the country now if they don't really approve of the work that you're doing. Maybe some of that you can, but take into account that, like, those people are definitely more liberal leaning, right? Those where you're more likely, like, people that are more liberal leaning are the people that are more likely to buy electric cars, because those are the people that are more likely, much more likely, to think that climate change is an issue, right? So you look at, like, conservative people on the other side, they might like Musk more, but that's not necessarily going to lead to them buying a car that's going to be more expensive, and they don't necessarily see the value and a bigger inconvenience, because, like, some of these charging stations, I'm sure, in red states are not as prevalent as they are in blue states. So it's kind of a bigger inconvenience there as well. And you're charging more, and you don't really even believe in the ethos of the company and why it exists. So you see a very real sales problem around that, especially, he's going to keep doing the work. I don't necessarily see it getting more popular anytime soon. Like, yes, it's quite possible that years from now, we'll look back and say, actually, all those cuts were a really good thing. But that's going to take years to potentially come to fruition. And that's a lot of time the sales can decline. And that's just like America. Obviously, we already see a pretty big impact on sales. And, one of the things that really helps a boycott is seeing it work, right? So if people are going around and they're upset with what's going on in America, or with Musk specifically, and they hear that sales are declining and the boycott against him is working, you're more likely to have people join that might not. Because, a lot of people, if you look at recycling, a lot of people don't really do recycling, or some, I don't want to say a lot of people, some don't really do recycling because they don't think it's going to make a difference. And they see, like, the major companies, polluting everything. And some places don't even, recycle, and some places do. They think it's too big of a problem. But if there's some people that are just like, I don't really like the job that Elon Musk is doing, and, like, I actually see these boycotts are working, that could have more people join. And throw in the fact that, like, a lot of Tesla's value, and a lot of shareholders said this, and, I agreed, like, if you think Tesla's a car company, you don't want to own it. If you think they're an AI technology company, that's when you want to own it and see the benefit. But, not alienating some of the people that are going to buy your products is not the way to, like, 10x your company value in the way that Musk is talking about. And I think it's just like, yeah, I think Wall Street analysts do not pull any punches. If he's showing up to the next conference call and sales are getting worse, and he's still talking about 10xing the company value, they're going to call him out. They're going to be like, well, I'm seeing declines. Like, what's your plan to come back from this? And like, what is the plan? Because this doesn't look like something he anticipated already. He could certainly quit the government. I think that would probably help. But I don't think he's really looking to do that. So yeah, I think the fact that it's, not only real sales numbers, but the fact that the very real perception around him is changing, and that's clearly causing more sells. We're seeing insider sales. We're seeing a lot of people, like, on his board start to sell. And that is when you start to accelerate downward. I'm not saying, I don't think it's likely that he gets margin call. I don't think it's likely that Tesla hits 100. But in December, I would have said that's impossible that it would do that. Like, now I'm just saying it's unlikely.
So to go from Elon, maybe the most outspoken CEO, to the opposite end of the spectrum, Andy Jassy, who I feel like, oh, we got the Elgato issue uh, just popped up.
Oh, God. All right, at least I know how to fix this quickly now.
I could actually probably tee us up while it's happening too, because in the shorts later, oh, I guess George is going to have to pop right back in. So we'll wait here for a moment. We're actually running out of time, so I don't know if we're going to get to our last topic of the day that I had, which was Nike earnings tomorrow. If there's any Nike shareholders in here who really want to hear that, make sure your voice is heard and let us know in the comments right now. Otherwise, we'll probably just do this Amazon story and then turn it over to the model portfolio update afterwards.
There we go. We
All
know
right,
how
we're
to
back.
debug quickly.
So, like I was saying, Andy Jassy, the opposite end of the spectrum, you barely hear from him. I feel like maybe the last time we did hear from him was his response to the silent firing accusations that we had. But, it came out that Amazon is terminating 14,000 managerial positions because of the AI efficiency that they're getting now, saving $3.5 billion per year. So who had the last laugh, George? Because I think we were right on that story.
Yeah. I thought, for those that didn't follow it, I wrote an article in Fast Company. I don't know what happened there. For those that didn't follow it, I wrote an article in Fast Company talking about what I thought was silent firing and basically these unpopular return to office policies, where it's just like, you know what I think? I think no one that sees the data, and the data is people are just as productive, and you retain more employees with remote workforces. So it became just like a logic exercise where it's just like, if this works and return to office is so unpopular, I forgot the numbers, but I think it said like more than 50% of the employees said they considered quitting. And I think close to 90% said that they didn't like the policy. So if you're doing that, why? Intentionally antagonizing your employers? Probably because you want them to quit. So I coined this term silent firing. That I'm actually surprised how many people heard. I was like, okay, this really made the rounds, but it was picked up in the Post, a number of things. So yeah, that was probably my most popular article. But the best part about it was when I saw Andy Jassy get asked about it, and he would not dignify my term. He said, we're not doing backdoor layoffs. And everybody knows silent firing is a way more catchy term than backdoor layoffs. He was intentionally making it more, boring and mundane. But yeah, now it certainly looks like we're right. You tried to get people to quit by making them come back to the office. I guess enough of them didn't quit. So now you're firing 14,000 people. I think they said that was 13% of the managerial workforce. Seems like we were pretty right. I think it was this summer, maybe in the fall, but it seems like we were pretty right when we said that you want these people to quit if you're firing 13% now of your managerial workforce.
Totally agree. And I think, the AI impacts of that class of worker is probably just starting to really, take effect on these big companies. And maybe we'll see more stories like this over the coming year or so.
Yeah, I mean, I think a big part of it is that a lot of what managers are doing is like checking work, making sure efficiency is there. And the more you're automating stuff, like you don't need a manager to check on a computer, right? You actually need coders to make sure the code is working and doing the outputs. But that's a different thing than, a manager who's there to like motivate and inspire. And like managers, I always think were kind of like the most useful. I think CEOs are very useful because you do have to set like a purpose and a tone at the top, right? But like a manager, you're kind of getting all that from above. And I'm not saying they're useless. There's really, there's good managers. But in a world where content is being produced in an automated way, things are being, different, things are being specialized like in automated ways. Yeah, definitely not as useful.
So, George, this green in the markets has held up while we've been speaking. Time to switch over. We'll see you in the Prospero lab and see what you decide to do in the model portfolio with this green day we're having in the markets. Stick here with me, everyone, as George does a switch over. He will be right back with us. and we will make the moves live, which is a paid for service, but you get to see it for free here on the streams. Hopefully, you all enjoyed the topics that we covered today. We got to a lot of different of the major tech stocks, which might come back into vogue if the market is able to set a sustainable rally. We're only at 6 likes though on YouTube. Can we get to double digits before the stream is over, everyone? Help me out. Throw us a like on there. Let's see if we get to 10 by the end of the stream. And what I'll do now is take a live look at the SPY and QQQ net option sentiment. We were seeing them move a little bit higher, maybe a little more trustworthy for the rally. Oh no, QQQ is back down to 19, so quick fade there. When George looked at it for a brief moment, it had popped up to 42, but back down below 20, and the SPY is still at 0. So not great. Not great for the net option sentiment, at least. Let's see if the markets. I did see they looked like they tried to dip, but now they're coming back. So more buying in the overall markets. Actually, there's not really much of a change in the overall levels since we started the stream today. So they've kind of just gone, a little higher, a little lower, and now back to where we were. So not much to report there. It's going to be interesting to see how the market moves the rest of the week. Now that it's kind of set this low, which I think happened last Thursday in the markets, if I'm not mistaken, and now has kind of traded sideways and started to maybe get some momentum. So we'll see if that's able to stick around in the coming days. Let's see, when was this low? March 13th. So yes, last Thursday. We'll see if that could be an interim low or a sustainable. Maybe it'll be the low for 2025. Only time will tell. Thank you, Bob, for your comment, by the way, about the possible Trump administration crypto announcement. Does anybody know if anything has occurred since we got that comment at 3:22? Has there been an update at all, or confirmation of the rumor one way or the other? If you guys have been watching the stream, George has MSTR, so I'm sure he's curious as well.
What's going on?
I was just asking if there's any update on the rumor we got in the chat, but I haven't heard yet. I did check on QQQ net option sentiment, and it was back down to 19, so that brief pop-up didn't last long.
The easy, I'm gonna keep holding. Not so easy anymore. All right. Okay. I'm going to ask you to give me actually that at the end again.
Okay.
Because it's moving.
So right. Mm-hmm.
Well, maybe I got to just give me some updates actually.
All right. I'll keep an eye on it.
Yeah. Because
hey, QQQ's at 34.
see? Oh, Caleb? I know Caleb. He said the digital asset thing?
Powell helped push up growth stocks, but they were doing well before he spoke too. We have taken on some more risk today and may take on a little more, but we will see how momentum is looking.
Yeah, what was I going to say? I thought I saw different numbers. Oh.
Consumer discretionary was looking for a positive catalyst, and we will look to clear out some of our bear positions here. We will look for bulls in industrials and financials, and bears in consumer, defensive, and healthcare.
Did we do this yet? Do. Where is it? Oh, I think it's that. Okay. And then damn, you can't unseat CCI this week.
QQQ update, it's at 24. SPY is still at 0.
All over the place. And TSM. How many of those do I have? 34. Okay. VA is looking pretty good. I didn't really want this, but it's looking too good. AMD. Something I like more. Guess what? One AMD. I don't think energy's doing that well today, is it?
Is there an energy index ticker I could look up?
It is, okay.
XLE up 1.7%.
All right, TNK. Okay. Okay. Do we have a PFGC open already? Here, I can find that easily. Yep, okay. Well, I think that's good. All right, what's the last reading here?
QQQ is 21 and SPY is 0.
All right. Done. Let's take a look at this. No, these are not updated yet. Okay. And then we have That's everything. All right. I think
Alrighty.
that is everything. Any last questions?
No other questions. Thank you Bob for your comments today. We've had over 2,000 people. Thank you all for tuning in. Time to see if this rally has any follow through the rest of the week. We'll see, and we'll keep tracking the net option sentiments. But until next Monday at 11 a.m., everyone have a great week. We will see you then. Bye, guys.